Hey, everybody, the stock market is near an all-time high. And whether or not you think that the stock market is too expensive, there are some bargains to be had in the market. Tyler Crowe is joining me. We're going to talk about three stocks that we think are kind of bargains right now as we head into March and the busy kind of spring season in the market. So before we get into it, please take a minute and check out the link you see on your screen for a message from our sponsor, The Motley Fool. It's the best way to support this work we're doing on YouTube, and you can get the top 10 stocks to buy right now. So I'll start with Tyler because if I know Tyler like I think I do, he's going to have some stocks that I'm not too familiar with to discuss. So, Tyler, what's one stock that is on your radar right now?
Well, I'm actually going to surprise you. So I have a well-known one and an unknown one. So I'm going to let you pick. Which one do you want first?
You can start with the well-known one.
Okay. So this is one that I have followed a little bit, almost out of intrigue, but now it's starting to, look a lot more serious. So I went from flirting to actually considering dating with this one, and it's Airbnb. Probably, I think most everyone has heard of the company by now. It's a company that, as I've followed it, one of the things that has always it made some sense in sort of like the business model had that network effect that just kept building, right? There are more and more hosts on there, which brings more and more people to the website or to their app, I guess, as more people are using it from a mobile perspective. And it's just this virtuous cycle of, building it to the point where Airbnb is becoming like a ubiquitous term for both leasing on a temporary basis or, looking for a vacation rental. You don't hear anybody be like, oh yeah, I VRBO'd it. No, it's not a thing anymore. And I think, Matt and I were talking offline with his rental property, like a vast majority of his rentals come from Airbnb versus the other sites. And so, with that in mind, I've been watching the company, and what has fascinated me the most over the past like year and a half, I guess, is the efficiency and kind of the economies of scale that have wrought or have been brought about with this company that have turned it into more or less a cash machine, which has surprised me more than anything else. Also, often we see these, um, you know, tech-enabled companies that have a hard time monetizing or have, operating expenses out the wazoo that kind of prevent proper profitability, but that hasn't been the case with Airbnb. Not only has it been, operationally profited, but it's actually been throwing off considerable amounts of free cash flow, which, obviously, if I'm looking for a business that's going to sustain for a long time, that looks much more attractive. And the thing that really sold me as of late is like last year, I think right around maybe this time a little later, they were talking a lot about all these new initiatives trying to get into different aspects of, you know, travel where it's like, well, we could do airfare, we could do, you could book your tourist visit or whatever. And there was just a lot of other like experiences and things like that. And it seemed very tangential and hard to pull off because like if you're starting to do flights, all of a sudden you're going up against the Expedia and Booking Holdings and all the other ones that do, flights already, which didn't seem like it was their core offering. And I would much rather have a business that's focused and really good at one thing than, drifts into six or seven things and does them all at a mediocre pace. So you have a much more focused business. Management seems to be caring more about the core of the business. They even said core 22 times on its most recent transcript. And doing what I think is a good expansion model, which is, hey, there's a lot of markets internationally that are underserved relative to some of the other places we're doing. So we're going to go there. And I think that's going to be a good growth model. And at 20 times current earnings, that's at their current growth rates, that looks pretty impressive, especially for a company with as much cash as they have on the books. It almost seems like, they're buying back a lot of stock more so than their stock-based compensation. So I always tend to point towards the flywheel has started spinning, and it's going to be much, much harder to disrupt it now.
Yeah, I'm a big fan of Airbnb. Like you mentioned, my own rental property, which is a totally anecdotal example. But there are a few things that really stand out to me and have surprised me over the past year. Um, you might remember when New York City outlawed Airbnb rentals for the most part, or really restricted short-term rentals. I thought that was going to be a big problem for Airbnb, and it might set off a ripple effect with big cities. that really has had a negligible impact on the company's numbers. Airbnb in its shareholder letter said that as soon as New York did that, it saw a big uptick in listings in New Jersey, right across the river, as people tried to take advantage. So it's been a much more resilient business. And I think I can't really think of any company that has successfully changed an industry to the extent that Airbnb has in the amount of time that it has. And it's just it's still going. Like there's a ton of international opportunity and really impressive. So I'm going to move on to one that's more of a value stock. That was an uncharacteristic growth stock pick for you.
Hey,
Um,
at 20 times
but
earnings,
yeah,
that's
I
pretty
was going to
value
say
growth.
you can make the case that it's transitioning to a value stock, kind of like how I would argue how Apple did, 5 or 6 years ago, kind of really went from growth to value in a lot of ways. I think in a few years, Airbnb is going to be like a true value stock, like paying a dividend and things like that. But anyway, so one that is on my radar that I'm kind of liking the more I read about it is a company called Bread Financial. Ticker symbol is BFH. And as Tyler mentioned to me offline earlier, the name is not great. Um, the name they used to be called Alliance Data Systems. They owned a banking subsidiary called Comenity Bank, which you may have heard of. If you have any store credit cards, there are pretty much two companies that issue store credit cards. There's Comenity and Synchrony. Um, and Comenity is the brand behind Wayfair's credit card, Camping World's credit card. They also do some co-branded cards, which, if you're not familiar, the difference between a store card and a co-branded card. Co-branded cards have like a Visa or Mastercard logo on them. It could be used anywhere. Comenity was the bank behind the Caesars credit card, Victoria's Secret credit card, the Ulta credit card. It acquired a fintech company called Bread Financial and adopted that name in 2020. Whether or not you think they should have adopted the name, I can't say. But the business is really impressive, and I've liked Synchrony for a long time. Bread is kind of I call it like a younger cousin of Synchrony. Um, the store credit card business has the potential for massive profit margins. A lot of people who don't have one don't realize, but whereas the average interest rate among a regular credit card right now is about 24 to 25%, for a store credit card, it's over 30%. The interest rates are really high. Delinquency rates are a little higher than average credit cards. Right now, it's Bread Financial's delinquency rate's about 8%, um, which that's standard for store credit cards to have high delinquency. But even when you think of things like interest expense and cost of capital, the difference between a 30% interest rate you're getting on debt and an 8% delinquency rate that you're absorbing essentially, that's a big profit margin. Bread Financial runs a 20% plus net interest margin, which most banks are happy with 3 or 4%. Now, uh, clearly there's a higher risk here than a traditional bank, than investing in Bank of America or Wells Fargo when it comes to the delinquency rate and maintaining that net interest margin. The company's kind of been in turnaround since 2020. They hired a brand new new leadership team. They spun off a legacy business, which ultimately went to zero. Um, that's kind of a theme when company spins off a legacy business, run away. Um, but now it's kind of a leaner operation. It's better capitalized. It trades for 6 times forward earnings. Um, Bread Financial's business has a 91% gross margin and a 15% net margin. So it's a very profitable business. But again, there is that risk if the economy really takes a dive or anything like that. As Tyler mentioned, if in other videos, if we get the 8 or 9 interest rate cuts over the next 2 years, it means the economy probably did poorly. That would be a big risk for a company like Bread Financial, which is positioned to thrive in a good economy. Um, Highly profitable, less a sub $2 billion market cap, over 100 store credit cards it issues, and it's a dividend payer. It pays a little over 2%, pretty safe, kind of low conservative dividend, very low valuation, and I love this as like a deep value stock right now.
Ah, sorry. So I'm actually I'm a little bit on the growth theme a little bit lately. So we're gonna go in a different direction too. The one I've been really interested in lately is called BBB Foods. It is the American ticker for a Mexican hard discount grocery company. They run about 2,000 stores in Mexico called Tiendas BBB, Bonito, Bueno, Burrito y Barato. Nice, good, affordable. It's a kind of simple, easy name there. But it's about a 20-year-old concept, and it just recently IPO'd a couple weeks ago. About 2,000 stores. And when you read the IPO perspective, you see a company that has spent an enormous amount of time knowing who its customers are, and there's a lot of little details in there that you kind of tell, like they know who their customers are and how to serve them well. For one, smaller footprint. Like hard discount kind of means like if you've ever heard of an Aldi or a Lidl or kind of that business where it's like we don't have shelves, we put it all on a pallet on the ground and you'll pick it up, and super thin margins, but you're trying to sell a lot of stuff really at really cheap and high volume. Um, they've taken that model and like built it for the Mexican market in an incredible way. Instead of like the big supermarket in the strip mall size, they do them small and almost like a convenience store size, like in dense neighborhoods, because they found with their shoppers, most of them didn't have cars, and so they had to walk their groceries home. So everything they built in the store and every product that they supply is designed so that somebody can go there 2 to 3 times a week, get enough groceries for 1 or 2 days and carry them home, on their person rather than having to lug them in any other way or have a car. It's little things like that are like, to me, why I think this business is going to be successful. It's a founder-led business. The founder was like a private equity investment banker who like studied hard discounters all over the world and saw Mexico like was barely had any penetration of this type of business, and said, I'm going to go set up in Mexico 20 years ago. 2,000 stores. They believe with this IPO, they can add another 12,000 stores across Mexico. And that's before we even start getting into the rest of Central America. It's about a $2 billion company. It's currently making losses, mostly on the fact that it's paying really high interest on some debt. But absent that and a good equity raise, we could actually start to see profitability, low margins, but super high turnover, much like a lot of other grocery stores. And with same store sales, like 12% or more over the past 3 years, and a huge store count increase coming in the next several, I think this is a really interesting opportunity for anybody looking at anything outside of the United States, especially in the Mexican market, which in my personal opinion, is one of the more attractive international markets to look at right now.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.